Well, it is now time to turn our attention over to the markets. Earlier this week, we had the pleasure of chatting with UNL Livestock Economist Elliott Dennis to discuss the state of the various livestock markets. Here's our conversation from Wednesday afternoon. We're going to take today's conversation kind of three different buckets, hit on the different livestock sectors. We'll start out in the cattle markets right now. Historic prices we've seen. Tell me what you're seeing.
Yeah, so really when we're talking about deferred feeder cattle contracts, we're in the 225 range. In the November-October market, that's pretty high. Even on the cash side, on the 550s, what we're seeing in Nebraska right now is well above the 240 range. There's a lot of optimism that through the summer we're going to see these prices go higher. I think probably the limiting demand on both the feeder cattle and the fed cattle side is going to be the consumer demand throughout the summer months. Really, in the past 2 years, we've been really, I would say blessed to have really strong consumer demand, both on the domestic side and the export side. When we look at those demand indices, what we see is that's starting to soften, particularly on the export side. And so when we talk about where beef demand goes, it goes to the consumer, it goes to the food service, and that consumer can be either the domestic market or it can be the export market. So while the market fundamentals are there to support higher prices from the supply side, we have to be watching where that consumer side is going to be. And so if we don't start to see those prices continue to rise, it's probably some indication that we've reached some upper threshold on what consumers are willing to pay for a pound of beef.
I want to ask you more about those market fundamentals you mentioned that are helping build this market up. For our viewers today who are not cattle producers themselves, share with us what are the factors leading to these prices we're seeing?
Yeah, so it's really fundamentally about supply. When we talk about, we have meat or beef in the retail market, well, that has to be produced, and it takes several years in the case of a beef cow to actually get to retail. And so what we're seeing right now is kind of this change in supply dynamics from the animals that we have the ability to harvest and the animals that are actually available. And so we're just seeing fewer animals out there. If there's fewer animals and we have consistent demand, we see prices go up.
Your estimation on time that we'll see this market holding strong here or begin to soften perhaps?
I think we have to have a lot of caution going into the summer months that these prices will soften. We tend to have pretty strong demand through summer, through the grilling season and some kind of changing supply, but I'm really concerned when we look at really the dollar and the strength of the dollar that it has right now. It really hurts exports, and so that's what I'm going to be keeping my eye on throughout the summer months is how do exports hold up.
You will often share with us some different tidbits you're seeing out there in these different segments. On the cattle front, you noted beef and dairy cross, that market becoming larger. You're tracking some data there.
Yeah, so we have a lot of indications that this market is becoming more appealing to the dairy producers to try to put an Angus embryo into Holstein, and then there's a lot of consistency on the grading side, and we can grade them choice or better a lot of the times. And there's also consistency in what that meat product is and be consistency in ribeye size, for example. One of the ways that we can see that is the volume going through these video auctions on the beef, such as like Superior or the Fed Cattle Exchange. And what we're seeing is that really since 2020 to 2021, the volume going through was pretty consistent. And in 2022, we saw a significant spike. When I say significant, up about 50% in total volume. So this used to be thought of as a niche market. Now it's kind of looked as an emerging market, and one that I think we need to keep our eye on that can really have a significant impact when we talk about the quality of the beef that's brought to market, not just the quantity.
Interesting nugget there. Appreciate you sharing that with us today, Elliott.
Yeah.
Let's transition, talk a little bit about the hogs markets. Of course, the basics of markets is supply, demand, create your price. What's happening right now in the hog market that you're seeing?
Well, oversupply of hogs. The quarterly hog and pigs report came out, and really that's what it was saying. We kept out kind of a pretty consistent breeding herd, and really what that's indicated is that we have an oversupply of hogs. They're really heavy on the front end, and when we look at what are producers doing to adopt to those or change to those prices, what we're seeing is that farrowing intentions for this quarter and the next quarter are down 1.5% to about 3%. And so what that ultimately means is that we're going to continue to have lower prices, and that base hog price is going to continue to kind of creep down towards that 5-year average, the 2017 to 2021 average. Likely not going to see the prices we saw in 2022, which means short-term profitability is going to be hurt. But as we start, if those farrowing tensions actually go through, which they're just intentions at this point, we won't see that impact on hog prices and ultimately inventory until the end of this year, beginning of next year.
Yeah, that's a tough market. We're going to talk more about pigs on next week's show. So I want to wrap up here talking about the poultry side of things, highly pathogenic avian influenza. What are we seeing there, Elliott, in terms of, are we still seeing some flocks impacted by that across the U.S.?
Sure. We've talked about this a number of times, and particularly last year when we really saw the ramp up. The good news was that we were starting to come down on high path cases. We were at about 370,000 birds that were impacted. Since in the month of January, we're down to about 120,000 birds impacted as of March 2023. And we've only had 2 cases of high path in commercial flocks in the last 30 days, one in South Dakota, one in Pennsylvania. And so that's the positive thing, is we started to come down, although there is some worry that if we start to see, especially during this migratory pattern, that high path could become an issue again. But just to recap, I think we've talked about it off and on, but in Nebraska, from the inception of the outbreak to today, we have had about 6 commercial operations in Nebraska become affected with this, a little over 6 million birds that have been impacted, primarily on the laying side. Iowa has been the most state that's been the most impacted. They're at a little over 13 million. And on average, we're about 55 million birds throughout the United States that have been impacted by high path since our initial inception in 2022 to date. And so ultimately what that means is it has impact upon prices, both on the broiler side and on the egg laying side.